Hello, good evening to you. Welcome to Business Focus, your business-oriented discussion here on TV3. My name is Alfred Okanse, and 10 years after the commercial production of oil in commercial quantity, there's been calls for a review of some of the contracts in the oil and gas sector signed by previous governments. Now, an economist is raising concern that we should be cautious about that particular call, in that it may cost us if we continue on that path. We're going to be finding out exactly the validity of that particular caution. Going forward, now we have a report that is also pointing to the fact that local ownership of banks could dwindle to a very, very low rate if Bank of Ghana begins the application of the Basel II and III recommendations or requirements of the recapitalization of banks in this country. Now, the Africa-wide picture indicates that local ownership of banks actually increasing in some African countries. We're having a discussion on this continuing matter tonight here on Business Focus. My name is Alfred Okanse. We'll be back with some more details as we round up the week for you and a number of stories that have made the business headlines for the week. Well, so those were some stories that made the headlines in the business world over the week under review. I'm going to go for this quick break. When I do come back, we will definitely getting to the discussion, the continuing issue of a threat that is posed to local banks, if there is, on the issues of ownership after the recapitalization of the Bank of Ghana by end of 2018. I'll be joined by my guests to help us understand the threat that has been postulated to be faced by the banks. I'll be back shortly. Do stay with us. Welcome back to Business Focus. Now, quickly, banking consultant Dr. Richmond Etuaine is saying that local ownership of banks in the country is under threat. He says to avert the looming danger of the country selling its financial birthright to foreign investors, a central bank has to relook at its module of recapitalization for banks again.
A report by GN Research indicates local ownership of banks in Ghana averaged 61% between 1992 and 2006, but by 2017 the figure has fallen to 21%. With a race to meet the Bank of Ghana's new minimum paid-up capital of 400 million cedis, there is the fear that private domestic capital of banks may see a further decrease as local banks may not be able to meet the required capital. Banking consultant Dr. Richmond Etuaine says the dwindling of private domestic capital in banks amount to selling Ghana's financial birthright to foreigners.
If we don't take care, we'll find ourselves one day there is no local bank or private domestic bank in Ghana, and all our lives will be in somebody's hand. The former governor of Nigeria, Sanusi, I quote him, "Foreign banks do not support economic development of local countries."
He said the problem is coming from the central bank's model of recapitalization for banks, cutting the same capital for all the banks irrespective of size and orientation.
In the year 2010, the Central Bank of Nigeria decided that they cannot continue with the universal banking concept. So what they have done is that they have risk-fashioned banks according to their risk appetite and their capital. Number one, they have now commercial bank, they have international bank, they have universal bank, they have development bank, they even have contract banks, so that everybody is giving an allocation to his capital rather than giving a blanket check like everybody should bring 400.
He warned of cross-border contagion effect which can collapse Ghana's banking system.
What happens is that if there is a seismic risk in Nigeria, it will cut through straight into Ghana financial system and it can collapse our system. Because of the linkages we have with Nigeria, we will be also leaning to South Africa. Now the asset base in Ghana is very high. Rand, Stanbic, and then Barclays Ghana, which is in the hands of. So we have to be very careful.
So that's the caution there. He says we have to be very careful. That's banking consultant Dr. Richmond Etuaine. I've been joined in studio by Dr. Lord Mensah. He's a senior lecturer at the University of Ghana Business School. Doc, it's good to have you. Good evening to you. Thank you for always joining us. Yes. So the preamble for this angle of the discussion is what Dr. Etuaine is saying. Would you say that that caution sounded has some potency in it?
Yeah, there is some potency, but then for me, I don't see that to be a cause of alarm as we speak now. Because if you look at banking and defining ownership per se, how do you look at ownership? Ownership could be when the bank's headquarters is situated somewhere. Mm-hmm. Ownership could also be talking about whether it's foreign ownership or local ownership. Ownership right. Could also be when more than certain percentage of the shareholders are foreigners. Then you can classify them to be owners. Now, there is economic repercussions when you have a concentration of your banks going into foreign hands. Mm-hmm. It's justified to say that if we allow that to continue, at a point in time, we'll end up having the entire economy in foreign hands. And remember, when it happens like that, and then it turns up that a parent bank demands, a representative, a subsidiary in the Ghanaian economy to withdraw overnight, they can easily withdraw. They can easily withdraw because the parent bank has called in. Now, if you take, we speak now.
So, for example, you're referring to the Barclays situation.
The Barclays situation. Mm-hmm. Now, as we speak now, if you take the concentration of assets in this country across the banks, it's not in the hands of the foreign banks. That is where, you know, I say we don't need to worry so much, you know, the panic that, you know, in the end we're going to have all our you know, banking sector dominated by the foreign banks. There is an advantage for having foreign banks in your country.
What are those advantages? Let's outline them and juxtapose it with the disadvantages that Dr. Tuahene outlines.
That's perfect. Now, with the presence of foreign banks, there's always financial muscle. So you won't turn up like having the same economy trying to turn around, you know, the funds that is in the system, if it is dominated by local banks. So there's kind of dilution in terms of banks. And then also, if you look at competition, now, with the presence of foreign banks and knowing very well that the location they find themselves, they need to compete, they are very, very innovative. And therefore, there's kind of innovation spillovers to our local banks. Then also, we're looking at global best practices in terms of, you know, governance of banks, okay? You're looking at foreign banks, you know, meeting some certain international standards, and then in the end, we expect that with their presence and then the competition that the local banks foresee with their presence, they're going to have a spillover in terms of governance structures, you know, good governance, okay? So for me, the advantages is kind of huge. But then in the end, when we get to a threshold, okay, there's a likelihood that, you know, we'll end up ceding the economy into foreign hands. And that is where he's coming from.
If you say we end up ceding the economy into foreign hands, exactly what do you mean?
When you take the banking sector in this country, we're talking about economy where one part of the economy needs funds, other part also has excess. So that transmission goes through the bank. Remember, our financial market is not that well known in terms of liquidity. If you take our treasury market, how many people knows that kind of investment? The financial system in this part of the world, including Ghana, is basically on, you know, banking sector. So in the end, with the banking sector, without the banking sector, a lot of economic activities might not go on. That is why I'm saying that if it turns up that we have foreign-dominated banks, then in the end, we should see, you know, at the end of the day, the economy going into the hands of what? You know, foreigners. Because we're going to have the transmission mechanisms, okay, in terms of funds, you know, going into the hands of, you know, foreigners. And remember, the risk is so high. You mentioned something about systematic risk happening somewhere and then coming into
absolutely.
Ghana.
That risk that you talked about, innovation spillovers. So
Yes.
there's also the systemic risk spillovers,
Sure.
which we will definitely not be spared if it should
If
happen.
it happens, because I mean, let's take for instance a typical bank that has the headquarters in Nigeria, and it happens that Nigeria is in trouble, economic sense.
We have a number of Nigerian banks in Ghana now. You know, so he makes that reference, having in mind the influx of Nigerian banks into Ghana.
Yes, the concentration is basically Nigeria. It has to do with proximity. It has to do with medium of communication. Now, if you take, you know, Nigeria, once you move to the left side of Nigeria, you move to Cote d'Ivoire, they won't be comfortable. Sorry, you move to Togo, they won't be comfortable.
Sure.
You move to Benin, they won't be comfortable. So the next destination will be Ghana. So it has to do with proximity and at the same time, the medium of communication. That is why we have, you know, a lot of Nigerian banks here. But then also, we turn up to have a requirement, which is universal, standard. If you think you cannot meet it, drop to the lower, you know, non-bank financial institutions, being rural banks. So if you are recapitalizing, it turns up that you can't meet it. There are other criteria that you can meet when you're looking at, you know, the lower sectors. So you can turn up to be a rural bank, you can turn up to be a non-financial bank. At the same time, you know, you can recapitalize. Now, they're looking at a situation where local banks will start, coming together. So more or less, waves of merger.
That merger has been anticipated.
Waves of merger coming in.
And we're told there's few talks going on. I'd like you to just hold on a bit,
right,
because the former group CEO of EcoBank Transnational Incorporated, Albert Essien, is also saying that the concern of dwindling local ownership of banks can be addressed through the stock exchange. Now, though he agrees there is a need for indigenous shareholding in banks, he was of the opinion that it can effectively be done when banks list on the stock exchange. Let's go listen to it.
A well-capitalized, strong bank. It's true that we need to have indigenous shareholding. I would rather we had that through the stock exchange, so that we would have more retail investors and other partners participating in it. Whether it's foreign or local, the important thing is the bank should be able to help in the development of the country. It's a question of people coming up with the capital to support the growth of banks. We Ghanaians would want to hold it alone. We should learn to partner with other players. If we do, local ownership would prevail, and that can happen through the stock exchange.
Right, so that's Albert Essien, former group CEO of EcoBank Transnational Incorporated, speaking there. Now, he is with GHL Bank now. Been joined in the studio by Joe Jackson, as financial analyst and actually head of operations at Dalex Finance. Good to have you, Mr. Jackson.
Good to have you too.
Thank you so much. Now, early on, we had Dr. Echiahene make the point that foreign banks don't support local economies. And so you have a sharp contrasting statement by Albert Essien that, look, really, if it's a local bank or foreign bank, doesn't matter. What matters is that the bank is supporting the local economy. Is it the case that foreign banks are less committed to the contribution to the local economy or not?
I don't think it's just as simple as saying foreign banks are not interested in the local economy. If they were not interested in the local economy, they wouldn't be here in the first place. But even worse than that is that weak banks don't support anybody. So it's not really a matter of foreign versus local. It's simply this: we must have strong institutions. I'm a Ghanaian. I work in a completely local institution. I would love to have some of our institutions local. But I also recognize that I'd rather have a strong institution than an extremely weak and precarious institution. The amount of damage that has been done to our local institutions by the two institutions that were taken over by the central bank.
GCB
You mean you're talking about the UT Capital Bank?
Exactly. It's easy to talk about the stock exchange, but look at the number of people who've lost money in the stock exchange over UT. That is what damages us. That is what makes it increasingly unlikely or difficult or challenging to say, I want to go and list on the stock exchange as the primary method of raising
So
funds.
for you, the stock exchange option is not even a good one to
No,
consider.
it is there. It's an excellent one. Except that by the very actions of our weak institutions and by all those who were complicit in getting us where we got to with UT and Capital Bank, they've damaged the institution, the
option of the stock
system.
exchange.
Yes, they've damaged the SEC, and they've made it difficult for anybody. Then think about it. After UT, what do you think will happen if we're the next the next bank that says I'm Ghanaian and I'm listing on the institution and come and buy me? That's the truth. So, but I will always say, let's support our own, but let's hold our own to best practice internationally. Let's not say that because they are our own, we're going to cut corners for them. They can be weak. They can be lawless. Then we are making a big mistake.
How much of a threat is it if local banks are taken over by foreign banks? Because you have one of the major objectives of the Bank of Ghana in going along with this Basel II and III implementation and having banks recapitalize is to contribute to the economy.
Recapitalization is still Basel I.
It's still within Basel I.
Yes.
And they're going to, but they have plans of instituting or having
Basel
banks
II.
go
Basel
by the
II
Basel
is
II and
ongoing,
III.
but not fully fledged.
Implemented now.
Yes.
So if you have them, I mean, local banks now taking over by foreign banks because of this recapitalization directive, how much of a threat is it for that objective of having it contribute to the economy?
Listen, an institution here has to make money. It's not going to make, it has to make money by working locally. That's why it is different from an institution based in Togo, an institution based in South Africa. To say that they don't work with the local economy, for me, there's something wrong with that argument. They work here. They work with the local economy. They make money here. We can say that they may not necessarily be aligned or sympathetic with some of our long-term strategic
objectives or economic, would I say, objectives as a country. I mean, that's...
Let me.
But I'm more worried about institutions making decisions that make them sustainable than just taking, if for example, today you legislate that let's go lend to X sector or Y sector, it must make business sense. It must be sustainable. The risk must be at levels that we can take. Any attempt to say that get a local institution and get the local institution to do things that are inimical to its own existence will destroy that institution faster than we can say jack. So as much as I understand, and I'm sentimental about Ghanaian business. After all, I'm a Ghanaian entrepreneur. I've run businesses here. I work in a very Ghanaian institution. I'd like the idea of Ghanaian ownership. But I assure you, I'm not about to tell my institution to just walk a certain pathway just because that's what is so great for this country. It has to make sense. You have to be sustainable.
Dr. Mensah.
Yes.
Now, this bit on, because I listened to Dr. Maxwell Poku-Afare, who's the first deputy governor of the Bank of Ghana, make the point that one of the reforms is to ensure that banks are adequately capitalized so that they will be able to support their activities in line with the exposures of the banks, the degree of sophistication and the degree of risk they're also exposed to. Now, does the argument for local banks hold in this case
You see,
against foreign ownership?
Banking is dynamic. Banks are growing into innovations, bringing different products. Now, if you look at Africa, the growth trend in Africa is being, molded by technology, mobile phones. So we keep on introducing, product here and there. Therefore, looking at the exposure, that the central bank perceive, they cannot, run away from the banks to say that, look, let's share the risk. So recapitalization is a form of, risk sharing. It's a form of risk sharing in the sense that the bank is now committing its capital. There are issues of liquidity, and when the banks have to raise money here and there, they will struggle to have funds available to make loans, which the objective of getting the economy, to have a way that people can have access to funds easily, can be crippled. But then in the end, if you look at the risk that, banks are being exposed to over time, then it calls for a buffer. And that is why this recapitalization. Now, let me come back to say that when it comes to, whether a bank is foreign or not, I can tell you for a fact that in this country, if you look at bank concentration in terms of assets, it's not foreign.
In terms of assets?
In terms of asset. And then in terms of branches. So if you are thinking about how, to get, foreign banks to the local level, then we still have local presence that can do that. Because in terms of branches, let's take, for instance, our own commercial bank. It's almost everywhere in this country. And if your objective is to ensure that all and sundry, everybody in Ghana owns an account, like what, the Vice President mentioned some time ago, last week, then you can channel that still through the, local banks. So for me, if I look at it from the asset base, and then also the number of branches that the local banks have, I don't think there's a cause for alarm for this recapitalization.
And this discussion, it's an ongoing discussion. And this is not the first time we've had this recapitalization discussion, but probably from a different angle this time around. It's going to continue until 2018 when the banks, local banks, have to meet this 400 million cedis figure that the Bank of Ghana has given. But this discussion is
foreign banks to have to meet the
absolutely.
They have a universal criteria. So.
Well, this discussion has been occasioned by this new report published by GN Research, showing a glooming trend as the level of ownership of Ghanaian banks dwindles. According to the report, foreign investment in Ghanaian banks keep increasing as local private interests see a downward trend. They mention countries such as, so from 1992 to 2006, we had 61% of Ghanaian ownership. They're averaging.
This is where I have a problem. How do they define their ownership?
Well,
is it by shareholdings or the location of headquarters?
Yes, the figure has fallen by 21% in 2017. So they cite, as you can see on your screens right now, they cite countries, some countries on the continent, local ownership of banks across Africa. Cote d'Ivoire, 100% ownership, local ownership of banks operating in that country. Nigeria has 80% locally operated or locally owned banks. South Africa, 76% locally owned. And Ethiopia, more of the banks are state-owned. And then in Ghana, 48%. Now, Ms. Jackson, these statistics and how they look, is it worrying, to say the least? Or is there evidence to show that local banks indeed contribute to the economic development of our country quantifiably for us to make a case for them?
Honestly, I don't see the problem with these statistics. I really do not see the problem at all. The ownership of the bank will grow when Ghanaians grow. So you're in a catch-22 situation. You see, we can only grow our ownership of these banks with our savings, etc. We can't conjure money unless you're going to make them state-owned, which I hope nobody's even going to go there and talk about.
Well, I mean, so let's look at those economies and the countries that we just listed and their economic situation now, and how much of the local ownership of banks has helped the economy. So if all banks, most of the banks in Ethiopia are state-owned, how much of it has contributed to the economic situation of Ethiopia now? So if in Cote d'Ivoire is 100%, what's the state of the economy of Cote d'Ivoire and the contribution of the banking sector to Cote d'Ivoire?
You see, hold on a second and be very careful that when you use Cote d'Ivoire as an example, when the currency itself is controlled from outside the economy, and the economy is still growing, I'm not sure. If you ask me about the growth of Cote d'Ivoire, I will ask you what is due to the banks and what is due to the fact that the CFA is controlled and not allowed to play havoc with planning like our CD does.
Largely by France.
Exactly. So let's be careful. And if you go to Ethiopia, 100% state-owned, is that what we want here? I'm sorry, but those examples given don't excite me. Look at Nigeria. Nigeria is in the throes of a recession, just barely coming out of it now. So what example is there 80% setting for me here? 80% ownership still didn't change the recession, still didn't change any of the problems they had, still didn't stop the cedi from the naira from depreciating from 160 now to 360 over a period of 2 years. I'm saying it's irrelevant to the discussion. Give me strong institutions. I would rather have strong institutions, 100% owned by foreigners who are working in Ghana, employing Ghanaians, making loans to Ghanaian businesses. These businesses don't make loans to, they don't sit in Ghana and make loans to Europe. Or is it a repatriation of profits? Then we should be looking at the mines. We should be looking at other sectors. We should look at telecoms. Let's even compare how much of their profits are repatriated compared to the telecom sector, compared to the mining sector. I'm saying that the financial sector, foreign-owned financial sector, is not, it is a storm in a teacup. And it is an attempt by weak institutions to give themselves an edge when they should be merging, they should be taking over in order to form stronger institutions.
Do you see same, Dr. Lord Mensah?
Well, if you look at foreign-owned environment in terms of banking and then locally owned environment, if you look at it real, financial structures within economies are quite historical most of the time. And if you categorize countries by Anglophone, Francophone, you realize that most Anglophone countries have a lot of dynamics in terms of changes in their financial system, which Ghana is part of it. Because of what? Liberalization in trading. You understand?
Right.
So for me, those statistics that came up there, you could see clearly that, why didn't they add countries like Egypt, countries like Morocco? You're going to realize that they are also 100% state-owned. You understand? Because a typical, Arab environment, it's not everything that money is supposed to do. You understand?
Right.
So it's quite, problematic when you are comparing countries in terms of their ownership and then economic performance.
Interesting.
I would dare suggest that these statistics have been chosen selectively. If they gave me a cross-section of all of Africa or sub-Saharan Africa, right, then I would be a little bit more excited about the analysis. You don't pick and choose 5 which support your argument. What about the others that don't support the argument? Is the curve not going to be a bell curve? Is there not going to be some? Show us the full data. Don't be selective.
So for example, they cite in the United Kingdom, for instance, I'm reading from the report, the GN Research report, the National Westminster Bank, that's NatWest, and Lloyds Bank, which are all local banks, are considered to be those driving growth, while the Dutch Bank and Commerce Bank AG are also doing the same in Nigeria. Last year, the NatWest launched a £1 billion small business fund to help entrepreneurs to start up. So when you look at the details of some aspects of the report, they try to make a case that, in terms of launching initiatives to support and finance local intervention programs, you would have local banks more interested and committed to that cause than foreign banks. And this is going to be final.
They're not doing that. Local banks, as it stands now, are not committed to, startups, as we see. It's rather government-established initiatives that are committed to startups because of the risky nature of startups in this part of the world. Now, if you take the statistics across all the banks in this country, go into their assets, and then categorize them. I have done that with my students. You're not going to see any bank committed to startups. I have, my students. Is nothing to write about. You can still have foreigners coming in and still be committed to startups. Let me tell you one thing. Banking is about business. If the bank has money available and realizes that this is the trend in business, okay, it's the startup, aspect of the venture capital that is booming, that is driving the economy, the banks will be committed to that. It doesn't matter foreign or local.
Thank you.
Yeah. Let me even say this. We have banks like NIB, ADB. They were set up with specific developmental goals in mind.
We've moved away from
They
that.
moved away from that because it was
Yeah, but
either stay on that course or die.
We passed universal banking law.
No, I'm coming, but it was either stay
no,
on
no,
that
no,
course
no, keep the
or
banking
die.
one.
Exactly. So really,
you should open up in a profitable direction.
If you want to drive institutions to lend to specific areas, let's do the stuff that they are doing with GESAL. They are reducing risk of lending, say, to the agric sector,
right?
By giving you an insurance scheme,
yeah, sure.
by giving you lower rates, money at lower rates,
so that the issue of a high risk sector will not deter banks.
Thank you, because I'm a business. If you reduce the risk, I'll put the money there.
Of course.
If it is a lot risky, what are we implying? That our local banks should undertake riskier businesses simply because we say so.
Because they are local.
Because they are local.
Joe Jackson, thank you. As always, I'm grateful. He's a financial analyst and head of operations at Delex Finance. Also, thank you so much, Dr. Lord Mensah. As always, gentlemen, you're very committed to contributing through this discussion to the development of this country. He's a senior lecturer at the University of Ghana Business School, joining us to do this discussion. But for those of you who were affected by the system malfunction of ECG, I hope none of you were.
I live far away somewhere.
Not really.
Thank you. The managing director of the Electricity Company of Ghana, Engineer Samuel Boakye, has issued a stern warning. The Electricity Company of Ghana has not directed anybody to reactivate cards for customers in the district. Anybody found culpable will be dealt with. Also, the head of operations, that's public relations at the ECG, William Boateng, is saying that the company has resolved the hitches that occurred in previous days. He had a chat with my colleague Daniel Opoku. Let's take a listen to him.
We have a relation with our customers, and I think that they have every right to see us if they have some challenge, one way or the other. So it will be welcomed if they come to see us with any challenge of that sort. We'll look at it.
Does the EC have money to pay, or you just restore credits to them?
Oh, I don't remember over the years when we have given some money to customers per se. Maybe sometimes it comes in this type of the form you just made mention of, where we top up some credit to take care of some challenge or some compensation.
What is the process for restoration of cards?
Restoration of cards, the issue that crop up with the BOT customers, about the 4 districts specifically, it has to do with our server, the failure of our server. And so initially, customers couldn't buy at all. We are talking about over 300,000. That's about 324,000 customers. That's about 12% of our total customer population. They couldn't vend in the 4 districts at all. Then we brought the server back to circuit around the Tuesday afternoon. So they were vending. Then the reports came in that some of the cards, the system could not respond to the cards. It means that we need to reactivate. So the administrators started working on it. So the process is simply when you go, now we have set up, you have the update of what you've done at today. And so now we have the data system set up in all the 4 districts. So customers have to go to their districts to vend. Now when you go and there's a challenge with your card, when you are coming to buy the electricity, we are doing the vending, you are buying the electricity, they will take it through the system. We've done well by increasing the process. In fact, we have done well by reducing the human intervention. So at least there's a high level of automation. Immediately you give the card to them, they slot it in, and it's reactivated. And then you move to the next stage where you just go and you purchase your electricity. So when you enter the district, you get your issue resolved immediately. It's a one-stop business at a place. You not be asked to go to another place. We have few cases now, after we finish, few cases where the card needs entire replacement. You won't pay anything about the reactivation, nor are we paying anything for the replacement of the card.
How soon are you resolving this malfunction of BOT?
Oh, it has been done. You know, the managing director, Engineer Boakye, just made mention of the fact that we have substantially resolved the BOT. You will recall that some 2-3 days back, there were huge massing up of customers at our project office. You remember you were there, yes. And today, the scene is entirely different, where there's a very small number of people going to collect their cars one way or the other, or they are waiting to be driven to their houses for replacement of meter, or they are waiting for their cards to be entirely replaced. So the ball game is not different, and we have substantially resolved it.
Right. Thank you.
Well, so that's William Boateng there. He's the head of communications at the Electricity Company of Ghana, speaking to the fact that the company has resolved the hitches that occurred previous days gone by. Also, the managing director of the Electricity Company of Ghana, Engineer Samuel Boakye, issued a stern warning. The ECG has not directed anybody to reactivate cards for customers in the district. So anybody found culpable will be dealt with. He had that chat with my colleague Daniel Opoko. They have been joined in studio by Justice. He is an analyst with First Bank, and want to find out the strength of the city as we go into the Yuletide. And obviously, a lot of people have predicted that it's not going to be good. Justice Edu, it's good to have you. Good evening to you.
Nice back.
The trend continues, Justice, and last week when we had a discussion of how long we were going to experience this, you said it's going to go into the first quarter of next year. Now, is it going to have some stability at the point, or the downward trend would continue, at least by your own analysis?
Yes, as I mentioned last week, if you look at the fact that on the global market, the dollar is trending based on domestic policies in the US. And if you look at the fact that over the past 1 week or two, almost everybody has been concerned about the performance of the cedi.
Yeah.
It tends to put some pressure on the cedi. One, because as the dollar strengthens and as the euro in particular strengthens also, the cedi, based on its fundamentals, to perform weaker against it. And as we make these comments, there's some bit of speculation as well. It's like you and I sitting here talking about the fact that the city is under some form of pressure. So for speculators out there, they would also benefit from the...
People are saying they can't get dollar to buy. I mean, and I'm wondering how...
The availability of dollar shouldn't be an issue, especially looking at the reserve position of the Bank of Ghana. They've accumulated enough gross international reserves to the point where if they feel it's necessary for them to step in, they should be able to step in to stabilize the market. I think now they would want to see how things play out, and I think it's rightly so. Before you intervene, you want to know where the relative strength of your currency is.
Yes.
And this is not something that's peculiar to Ghana only. Across many African countries, if you look at the past couple of weeks, let's say in the period of 1 month, most African countries have had the opportunity to revise their policy rate. We did the same couple of months back. And for a country like Kenya, even South Africa, they acknowledge the fact that on inflation, they expect inflation to be subdued. But they are reluctant to adjust their policy rate because they feel one of the biggest causes to inflation, which is exchange rate, is something they are not too uncertain. They are not too certain about.
Wow.
Right. So the kind of strengthening the dollar is seeing, the fact that globally there's improved market sentiment and all that, it's putting a lot of countries on the edge. So almost all of them are adopting a wait and see approach. So it's the same situation for Ghana. Even though we expect inflation to be under control, we recognize the risks that exchange rate volatility can affect almost everything. And so the central bank wants to adopt a wait and see approach and see what the potential effect will be. If it's spiraling out of proportion, they will probably step in and intervene. And that's why I still insist that the trend should continue at least into the first couple of months in 2018. At that point, same as earlier this year, realized that the city came under a lot of pressure, and at some point the Bank of Ghana had to do some auctions. And after March, we saw some kind of normalization. So I expect something similar to happen this year.
I see. Now let's find out how the stock market is doing over the last week.
Yes.
And then
over the previous week, we saw a marginal decline in the index. For the past couple of weeks, we've seen one particular stock, Stanchart, tend to decide where the market goes. If they gain, the market moves in a positive direction. If they lose, the same happens. But there's sell pressure on Stanchart, and over the past couple of weeks, it's driven the index downwards. What happened last week was that the price of Stanchart didn't move, so more or less became an issue of how the other stocks will perform. And as the trend has been for quite a long time, the financial stocks tend to drive activity on the market, and in particular reference to last week, aside from the fact that Access and Enterprise Group lost, Gold, which is not a financial stock but one of the large cap stocks, lost as well. So that's damping the fact that other financial stocks like GCP gained. So there was a marginal decline, and today the data from the GSE seems to have changed that narrative. So the market gained gradually today as compared to on Friday. And
the pendulum of the commodities seems to favor the projections of OPEC, right?
OPEC has made their decision. They are extending their production cuts till the end of 2018. But market seems to have assimilated that bit of information into the price way before they made that information. Sure. So right now, information coming from China is that they've increased their demand for crude from around 7.3 million barrels of oil per day to about 9 million. And that's one of the reasons why we've seen crude inventories in the US declining, because they've accumulated a lot of inventories over time. True. And now because there's demand, they're actually supplying. But this hasn't really caused the spike in price many people are expecting, because on the other hand, if prices are good, the investors who believe in shale oil will think this is a good time for them to continue pumping. And because of the fact that, I mean, almost all analysts and investors on the market have priced in this OPEC decision, we've not seen a significant improvement in the price of crude oil. Right. For gold, it's a more dire situation because again, the fact that the dollar is strengthening, global market sentiments are picking up. For investments in gold, which is not monetary, it's not as liquid as maybe a fixed deposit investment. So anytime you have the dollar strengthening and yields on fixed deposit investment doing well, gold tends to suffer. And again, when you come to cocoa, I'm just mentioning this one because they are of peculiar interest in China. Cocoa also is not doing too well because out there is some form of projection that even though the surplus that we saw last year will not be the same this year, there will still be some amount of surplus. And when your supply exceeds your demand, you expect that to have an impact on your price as well.
Oh, fantastic. Thank you so much, Justice. I'm grateful. Justice Lewis, an analyst with First Bank. And I want to thank you very much for staying with us here on Business Focus. Going to be back next week with a lot more of these reviews. On behalf of the team, we're grateful. Stay with us as we get into News 360. Have a good evening.